Hey everyone, so we're back at it. Something's come up, right? More headlines in the newspaper. So home sales rocket to record levels. This is in today's National Post. So again, we're struck by the headlines. Something really interesting is I've really witnessed over the last year. And what it is a lot of people were very, very scared to get into the market, and rightfully so. I mean, there were some crazy things going on in the economy. Last fall, so October time frame. Remember, the world was coming to an end. I remember a lot of people telling me that. So, and it still might. There might still be another big dip. I mean, I'm not predicting anything, but a lot of people have missed out on a pretty good opportunity because now that the home sales are back where they have been, some prices in some areas are actually up. So the people that were holding back, waiting to buy, always trying to time the market, always trying to pick the perfect time to buy, they've lost out. You've already lost out on those percentage points. You can't get those back, right? So it's just kind of something, you got to be in the game to make things happen. You're never going to time things perfectly. And it's a point that we've talked about quite a few times. I'm just going to draw it out here. And basically, it's, if we have the graph of the price points and we have the prices, if home prices fluctuate, which they're going to continue to do, up, down, sideways, outer space, below ground, all over the place, right? But if they keep going like this, home prices are like this, if I own investment real estate and someone is paying off my home for me, the value of that home doesn't matter as much because I'm getting positive cash flow from my investment. Right? It's the biggest point. I know we've talked about it before, but it's another proof because I've seen investors that have held off last year buying, and now they're like, oh, okay, now it's the time. I guess maybe now I'll move. And they've only lost out on maybe 2-3%, but 2-3% on a $200,000 home, which not many good investment properties are sitting at $200,000 anymore in the areas that we invest in. Some are, not as many anymore. Let's say we're looking at 3%, $200,000. That's $6,000. Right, so it doesn't really work as well. So you're really losing out. So let's look at some of the key points that they're looking at this article. Okay, so we have 50,632 sales so far this year. I think it's for the Toronto Real Estate Board. So it's down 1.2% at this point last year compared to this point last year. Sorry, from this point this year compared to this point last year. Right, 1.2%. Last year we were coming off like all-time highs. Right? So 1.2% is not really a big impact, okay? Especially when you're coming from all-time highs. You can't keep eclipsing highs. Something has to kind of slow down. It's just natural. So, I mean, pretty normal stuff. A big point here, well, let's just go through them. $385,000 is the average price of the home this year, down less than 0.5% from last year. Okay, and that's the average because a lot of the higher priced homes have really kind of fallen, which has dragged the average down. The starter market, which a lot of good investment real estate is found in, really isn't as volatile. But let's get this point here. 350,000 to 450,000, and that's the most popular price point for people buying detached homes in the GTA at the first half of this year. Okay, so what do you get in the greater Toronto area? And let's talk about Toronto specifically. 350 to 450. When we talk GTA, let's talk Etobicoke to Scarborough. We won't worry about the Oakville area. Different people have different definitions of the GTA, right? So 350 to 450. What does that get you? If that's a detached home, that's a starter home. That's where the market is still secure. Where the market isn't as active is people looking to upgrade their home, or buy something bigger, or buy a second home. That part of the market is much more affected when there's insecurity in the economy, right? So if you're investing, a good idea, it's not the only way to invest, but a good idea is to keep that in mind because you might want to think about looking at that starter market if that's where the greatest demand is. Because in the starter market, you have young people that are looking for homes, you have a lot of people that are divorced and got back together with a new spouse or starting on their own looking for homes. You have immigrants looking for homes. There's more demand, right? So that's why, yes, there's more supply, but if you look at, underlying fundamentals of population trends and things like that, that supply is usually eaten up pretty well. So something to think about. And then 150,000 to 250,000 is the most popular price point for people buying GTA condos in the first half of this year. Well, what does that tell us? You know, we'll leave the condo market and the, you know, the statistics and sales behind the condo market out of it, but the 150 to 250 price point in the condo market is smaller starter condos. It's not big 2-bedroom plus den condos. And, you know, in the GTA, those type of condominiums don't sell for $150,000, right? Usually, most of them, as soon as you get to 2-bedroom, you're usually over 250, especially in the Greater Toronto area. Right, so now you're looking at smaller 1-bedroom, maybe 1-bedroom plus den condos. Maybe it's a loft, right, a smaller loft. Again, it's more in the starter home or the starter category of that condo market where people are buying. So you know, it's an interesting trend. So as an investor, I mean, I know if I buy a stock or a piece of real estate or anything, I want to invest where the demand is. Right? It's simple. So if I'm looking to invest in real estate and I see that where the demand is in the Greater Toronto area, that's something I'm more interested in investing in. Okay? And again, we're leaving out the type of home, type of condo, all that stuff out of it. There's a lot more factors than just that, but I just want to give you something to think about. Okay. 20% of the GTA neighborhoods that saw average price increases in detached homes and condominiums. So it's 20% of the neighborhoods in the Greater Toronto area saw average price increases in detached homes in the first 6 months of this year. Not bad considering the environment we're in. And again, it goes back to the point that real estate really is you know, a micro niche game. I mean, we can't paint the city of Toronto with broad strokes and talk about the Toronto real estate market because there's a lot of variables there. Condo, detached, townhome, you know, downtown, uptown, Scarborough, Bloor West Village, Danforth, Bridle Path. There's so much stuff. So, you know, it always goes back to these headlines. When you see this home sales rocket to record levels, as an investor, it's great. We start getting excited. I'm sure there's a lot of people that are starting to think about real estate as an investment again. Whereas, you know, 6 or 8 months ago, they said, oh, real estate's, we're going the way of the U.S., it's going to plummet. I mean, I heard that many times. So, and I was like, okay, well, I don't think so, but that's great. I mean, everyone's entitled to their opinion, right? So, it doesn't matter if the headline is good or bad, you need to look behind the numbers. So never get caught up in the headlines. You know, we've talked about it before. We're going to talk about it again. I hope this kind of gives you some insight into it. And remember, like, you always want to think about the long term. You can never time the market perfectly. I'm sure there's someone that'll be watching this that's going to say, well, you know what, now that the market's come up, it's going to drop now. And you know what, it might. But I mean, if you're going to sit on the sidelines and try to time the market, you're going to sit on the sidelines forever. Get into the game and make something happen. All right? We'll talk to you next time. Until then, your life on your terms. Talk to you soon.